Good morning and welcome to Market Pulse Flash. Just a quick reminder, this is for educational purposes only and not investment advice. Okay, today is November 14th, 2025. What a dizzying end of the week we had. It was a real battle royale between a big rebound in tech stocks and this growing anxiety over what the Federal Reserve is going to do next. So let's get into it. Here's how we're going to break down today's action. First, we'll take that big 30,000-foot view of the major indices. Then we'll zoom right in on the specific stocks that were making waves. And finally, we'll pull back to look at the economic storm clouds that are really driving the whole conversation. All right, let's dive into that big picture. The closing bell really just capped off a week of some wild swings. And it left us with a market that honestly seems to have a split personality. It was a genuine tug-of-war with tech bulls on one side and the macroeconomic warriors on the other. So what do the final numbers tell us? Well, the Dow Jones slid more than 0.5%, dropping about 310 points. The S&P 500, pretty much a flat line. But the real story, the one everyone was watching, was the Nasdaq. It actually managed to climb into the green, snapping a 3-day losing streak after staging this incredible comeback from being down almost 2% earlier in the day. And look at this chart. It just lays out the split perfectly. You can see the Dow, which is kind of our stand-in for the old-school industrial economy, deep in the red. The S&P is basically at zero, and then you have the Nasdaq, our tech barometer, poking its head into positive territory. It's like two different markets trading at the same time. So why this big divide? According to Brian Mulberry over at Zacks Investment Management, it's not so much about panic selling. He says it's more of a calculated shuffle. The thinking is, investors who've had this amazing run in tech are probably just trimming a bit and getting their portfolios set for the new year. So the insight here is strategy, not fear. Okay, now let's drill down and talk about the individual companies that were really driving the story today. We're talking about some pretty dramatic comebacks, a big change at the top of a retail giant, and yeah, that continued slide in crypto. Man, it was a day of mini dramas for sure. Nvidia, the AI kingpin, bounced back almost 1.8% after a really tough couple of days. Tesla showed some grit too, ending in the green after it looked like it might break below that key $400 level. But the standout performer? No question. It was Micron. It jumped a whopping 7%, pulling other chip stocks up with it. On the other hand, Walmart shook off news of its CEO retiring to close basically unchanged. Well, Bitcoin just couldn't catch a break, falling even further. So all this volatility in big names like Nvidia, what does it mean? Is this a tech wreck? Well, Daniel Skelly at Morgan Stanley has a great way of putting it. He suggests this isn't a wreck at all, but a tech reckoning. The idea is that after the unbelievable rally we've seen in AI stocks, some kind of pullback is not just expected, it's actually healthy. It doesn't mean the long-term story has changed. Now for Bitcoin, the diagnosis is a little more serious. Analysis from 10x Research is saying it's entered a bear market regime. And that's not just about the price dropping. They're looking at on-chain data, the actual transaction records on the blockchain, and seeing a real lack of new buyers coming in. That really helps explain why it's been struggling to find any momentum. That point about a lack of new buyers, it's not just a crypto story. It actually hints at the much bigger story that's playing out. And that brings us to our final section, the macro headwinds. Because no matter how great a single company is, it can't escape the gravity of the wider economy. And right now, that means all eyes are on the Fed. This is the one question that is making the entire market nervous right now. Why is the December rate cut, something that seemed like a sure thing just a month ago, suddenly on shaky ground? The picture has gotten very, very blurry. And this number right here, it says everything you need to know. The CME Fed Watch Tool, which tracks what traders are betting on, is now showing a less than 50% chance of a rate cut next month. To put that into perspective, just 1 month ago, those odds were sitting at 95%. That is a gigantic shift in sentiment. So what's behind this huge reversal? Well, it's really a perfect storm of three things. First, you've got some Fed officials coming out and speaking very hawkishly. That means they're worried about inflation and aren't sold on more cuts. Second, because of the recent shutdown, the Fed is basically flying blind. They don't have the latest jobs or inflation reports. And third, you have new geopolitical flare-ups like Iran seizing an oil tanker, which just adds more uncertainty to the mix. And while the Fed is wrestling with all of this, Reuters is reporting that the administration is looking at another tool to fight high prices, cutting tariffs. The idea would be to lower them on goods from Latin America to try and bring down those high food costs we're all seeing. It's still a developing story, but it shows you just how much pressure everyone is under to get inflation under control. So what's our pulse verdict for today?
The market is truly living on a knife's edge. You have this incredibly powerful long-term story about AI that wants to pull tech up, but it's fighting against this thick fog of doubt about the economy, all swirling around the Federal Reserve.
And that leaves us with the billion-dollar question for the coming weeks. Can the AI growth story create enough upward momentum to overcome the gravitational pull of the Fed's policy, especially in a market that's starved for clear data? That's the real conflict to watch. If this was helpful, drop a 1 in the comments. I'll see you tomorrow.